One research note, published quietly by a Swiss bank desk before Wall Street opened Tuesday, kicked over a domino nobody saw coming, and by Wednesday morning Korean time, every Bloomberg terminal on Earth was flashing the same number. Two memory companies crossed the trillion-dollar line in a single trading cycle. Sam Altman publicly walked back his own AI jobs apocalypse. A free GitHub tool ripped the safety brakes off the most powerful OpenAI models in 10 flat minutes. And Elon Musk started telling colleagues he wants to fold Tesla and SpaceX into one $3 trillion company. I'll show you the exact note by the end. Start with the screens, because every Bloomberg terminal lit up Wednesday morning the same way. SK Hynix, the Korean memory chip maker that almost nobody outside the semiconductor world could pronounce 3 years ago, ripped 11% in a single session. That one move shoved it across the $1 trillion valuation line. Year to date, SK Hynix is up roughly 250%. Only the third Asian company in history to cross the $1 trillion threshold. The other two are Samsung Electronics and Taiwan's TSMC. But here is the genuinely strange part. 24 hours before SK Hynix did it in Seoul, Micron Technology did the exact same thing on Wall Street. Up 19% in a single session, its biggest one-day move since 2011. Two memory companies on opposite ends of the planet hit the same $1 trillion milestone within a single trading cycle. That has never happened before in semiconductor history. Wall Street woke up Wednesday with a third memory chip trillionaire on the board in a single week. And the people who run AI? They were not watching the stocks. They were in Sydney, in San Francisco, and in Washington, having three completely different conversations about whether AI is dangerous, useless, or both at the same time. Stay with me, because one of those rooms quietly admitted something nobody in Silicon Valley wanted on tape. Sydney, Tuesday afternoon Eastern, Wednesday morning Australian. Sam Altman beams in by video linked to the Commonwealth Bank of Australia conference. The CEO of OpenAI, the man whose own company has spent 2 years warning Congress that white-collar jobs are about to evaporate, sits across from CBA Chief Executive Matt Coman. And then, on camera, in front of an audience of bankers, he says it.
Good.
I am delighted to be wrong about this. I thought there would have been more impact on entry-level white-collar jobs being eliminated by now than has actually happened. End quote. The man who built the product credited with starting the AI jobs panic just walked back the panic. In public. To a banking conference. With a smile. Then he goes further.
Good.
I don't think we're going to have the kind of jobs apocalypse that some of the companies in our space advocate or talk about. End quote. Translation. The doom narrative his own industry has been selling to politicians and investors? It is not landing. At least, not yet. He admits OpenAI was, in his own words, pretty wrong on the social and economic side. Now flip the screen. While Altman is dialing in from California, the Financial Times publishes a story that lands like a brick. Working with a small AI safety group, reporters downloaded a tool from GitHub. The tool is called Heretic. Its job is one thing, to remove the safety guardrails from open-weight AI models.
No specialist hardware.
No advanced skills. 10 minutes. That is how long it took to strip Meta's Llama 3.3 of every refusal, every safety filter, every block. Once stripped, the model answered prompts on building biological weapons, on writing malware to steal credit card data, and on producing child sexual abuse stories. Google's open-weight Gemma 4 model was decensored within 90 minutes of release. The same tool has produced 3,500 uncensored models. 13 million downloads. Pause on that number. 13 million downloads of de-guardrailed AI models sitting on the public internet right now, while the CEO of the most watched AI company is on stage saying don't worry about it. That is the contradiction that defines today. But it gets worse because the chip rally driving Micron and SK Hynix is not random. It is built on a single brutal financial reality. AI labs are buying memory chips and GPUs at a rate that has flipped supply and demand upside down. OpenAI's annual cloud bill has crossed $60 billion against roughly $25 billion in revenue. Anthropic spent $2.66 billion on Amazon Web Services in 9 months, which matches its total revenue for the same period. And Microsoft's reported cloud backlog of $627 billion is 49% OpenAI dependent. Read that again. The two leading American AI labs are spending more on infrastructure than they earn. Every dollar of that spend funnels into the same handful of memory and accelerator suppliers.
SK Hynix.
Micron. Samsung. NVIDIA. The trillion-dollar valuations are not enthusiasm. They're accounting. And one more wrinkle. NVIDIA just reported zero China revenue this quarter, after China previously represented more than 20% of its data center business. Roughly $15 billion in annual sales gone. The American chip giants are now almost entirely dependent on American AI labs. Which brings us back to UBS. On Tuesday morning, before the U.S. market opened, an analyst desk inside the Swiss bank quietly published a research note tripling its Micron price target from $535 per share all the way to $1,525 per share. 3 times overnight. Almost nobody outside professional traders saw that note in real time. But by lunchtime, the note had hit the wires, hedge funds repositioned, and Micron rocketed 19% into the close. By the Asian Open the next morning, traders in Seoul saw the print, did the math on what it implied for SK Hynix's high-bandwidth memory pricing, and lit the same fuse. 11% gain. $1 trillion valuation. 2 of the 3 biggest memory makers in the world now sit alongside Apple, Nvidia, and Alphabet in the trillion-dollar club. Samsung, which crossed earlier this month, is the 3rd. And wait until you see what happened next, because while everyone was busy refreshing portfolios, the story took a turn nobody on Wall Street saw coming. Tuesday evening, CNBC publishes a report that lands like a brick. Elon Musk has been discussing with senior colleagues the possibility of folding SpaceX and Tesla into a single company. A combined entity could be worth more than $3 trillion. Tesla shares spiked on the headline. SpaceX is already on the calendar for a NASDAQ debut on June 12th, ticker SPCX. The targeted IPO valuation? $1.75 trillion. The targeted raise? $75 billion. That alone would be the largest IPO in market history by a wide margin. Wedbush analyst Dan Ives, on the record, put the odds of a Tesla and SpaceX merger at roughly 80%.
80.
This is not speculation by anonymous Twitter accounts. This is mainline Wall Street pricing it in, today in real time. Meanwhile in Brussels, European regulators are quietly finalizing what people inside the Commission are calling the largest Digital Markets Act penalty ever assembled. The target, Google. The expected number, a high triple-digit million euro fine, landing before the summer recess. So on one screen, a possible $3 trillion Musk megamerger. On another, a regulator about to drop a record fine on a different Silicon Valley giant. Same 24 hours. And here is where it gets really interesting. None of these stories are independent. And just so the day has no quiet corner left, AMD began production ramp of its 256-core Venice EPYC processor on TSMC's 2-nanometer process. A new chip generation, the biggest leap in years, slipped out almost unnoticed because every other story was louder. Cohere acquired Berlin-based Reliant AI. Mistral acquired Austrian startup Emmy. Both deals announced the same Tuesday. That is how strange Wednesday actually was. A 256-core processor and 2 cross-border M&A deals were not even the headlines.
So step back.
What did big tech Strangest day actually tell us? First, the center of AI gravity is no longer in Silicon Valley. It is in Seoul, in Hsinchu, and in Boise, Idaho, where the memory chips and accelerators are physically manufactured. Wall Street finally priced that reality in this week, and the numbers are eye-watering. Second, the AI jobs panic that has shaped policy in Washington, Brussels, and Canberra for 2 years was just walked back by the man who started it. Sam Altman did not say AI is harmless. He said the apocalypse timeline was simply wrong, which means the regulators rushing to legislate against ghosts may be solving the wrong problem entirely, while the real problem sits on GitHub with 13 million downloads. And the one decision I promised you at the very start? It was a UBS analyst note. A single Swiss bank desk tripling Micron's price target from $535 to $1,525 per share. That one domino crossed the Pacific, lit SK Hynix on fire, dragged Samsung along, and reframed every AI valuation on the planet in 24 hours. One analyst, one number, $3 trillion companies. So I will leave you with this. When a single banknote can move that much value in a single day, who actually owns the AI economy? The labs that talk loudest, the chip makers who quietly take all the cash, or the analysts pricing the entire thing? Drop your answer in the comments. That's all for today. If you found this useful, like, subscribe, and share it with someone who'd care.
Catch you next time.